time to do some risk to reward, guys. We're assuming that we're back into a bull phase for precious metals. Gold was our confirmation that we're entering, the first clue that we're really entering. If it could hold out a breakout on a monthly chart, if all the other evidence saying it's staying in the bull, it's going to be in the bull market, next bull leg up, then after that, we want to move our attention to silver. We want to know silver. What's a good entry point? What's my risk? What's my probabilities of getting triggered out? And what's my probabilities of reaching those implied measure moves, those big targets? So I've done a few podcasts on silver targets. One of my greedy targets was 54, I think in 2020, I forgot what year, 22 or 24. But 54, 52 is pretty much a target, getting to those previous highs, getting close to those previous highs, and maybe a little bit more above. That would be our first targets, over 50 target. Right now we're at 1758. Let's say you haven't entered yet. You want to know, okay, what do I do? Do I wait till I close above my 2050 or 2150 level? Or do I want to enter here, closer to the 12-month moving average, lower risk area, and where should my original sell stop could be? Well, there's one thing that I've noticed is every time, let's go back. I call them the big four. There's four big bull runs since I have data since 74. There was one here in when we broke out of this base. Big bull run, and after that, sideways move for about 20, 30 years. After that, 2002, 2003, another breakout of this base, all these lows. That's our second one. Interruption, 2008. After that, we broke out here, 2009, all the way up to 2011. And here's a fourth one right here out of this 5-6 year base, broke out. Let's put this full screen. All right, zoom in, a lot of data. 78. Okay, so here's the base. Here is my breakout. My breakout right here about September 77. That's the first one. Let's look at silver. Let's put a vertical line right here at that breakout. What? Zoom down. Man, those big candles, man, they really skew. You really have to zoom in. Take the time to zoom in. So here was my line where I had my breakout. Silver, the price was right here. So after gold broke out, what happened to the price of silver? Did it pull back? We know that it takes about on average about a year for it to break out of its own pattern. But what's your risk? So once gold breaks out, my risk, the lowest it went. Get an arrow. Arrow, please. So here's my breakout. We've never challenged these previous lows right here. So the monthly candle chart lows of silver were done here. Gold broke out. And after that, the price action never challenged that. If you wouldn't want to wait for gold, for silver to break out, and you say gold's breaking out, monthly candle chart, that's good for me. Silver's going to eventually catch up. I'm willing to wait a year. And you want to take an initial position close to the 12-month moving average before you get far above when you break out. Entry would have been right here on this candle here, the same one that when gold broke out. And you would have put your sell stop right here below that wick, never knowing. So that would have been your risk to reward right here. Your risk, your entry here, and your risk position size right here, sell stop here. If ever went below that, below 12-month average, below that previous low on the monthly candle chart, you would have said, okay, something's wrong, shouldn't be there anymore. That's your risk. So that's for the first big breakout in the precious metals in 77. So after that started unwinding 20, 25 years. Here's the next big base right here. So in 2002, 2003, even here, or even I could say right here, March 2002, nice base, 12-month moving average here was going up, higher lows, breaking out. So where was my silver price? Right here. On this. All right. Arrow. Arrow. So right here was my price. So you're saying I'm not patient. I'm going to wait. I'm going to get in. I know gold's going to keep going up, monthly candle. I know silver might not be breaking out yet. So what happened to the price action? How low did it go? Did it go below the previous low on the monthly candle chart right here? This is $4, about $4.01. That was the low. So silver went up, hitting some resistance, sideways, pulling back down. The low of this candle was 450, up, down. Low of this candle here, 446. Never challenging here. So your entry here would have still been good, basing off the gold breakout. Even if silver hasn't broken out yet, you just want to get in early. You don't know how much time before it breaks out. You want to be there close to 12-month average where there's still a lot of weakness. We know silver is lagging. You want to buy into that weakness. And right here, you would have been a great entry with a sell stop right below the low of that previous monthly defined low right here. So that's for number 2. Let's go to, after that we had the interruption in 2008. Let's see where that broke out. And right here, vertical line. So September 2009, gold breaks out again. So all right, yay, back into action. So what about silver? Where's silver at that moment? Arrow, arrow, arrow. Right here. So silver is still way below. If you look at that, I would have probably drawn here a monthly defined resistance. But that's, you're getting stretch above the 12-month moving average at these moments. And then after that, if you get in, then there's a pullback. You fear, then you panic sell. Here, the wick even below 12-month moving average. So right now, gold, you're believing that silver always catch up to gold. Gold confirmed breakout, monthly candle chart. So right here, you would have entered on this candle right here above that 12-month moving average, right here. Where's the previous defined low? It's right here, this wick here, right at the bottom of that 12-month moving average. And that low is 1243. So you would have entered at 1666, the close of that candle, and your sell stop would have been here at 1243. So just below that would be your sell stop. And off it went. Did it go back below? Went up? No, never went back below the previous low. All good. And after that, you would have had a little advance ahead. And then after that, whenever the silver decided to explode, if it would have been 2 months ahead and in, 4, 5, 6 months, you're in, then explode, and you've positioned yourself in a safe spot where the low is never to be challenged again, guys. So that's for the second one right here. That brings us to the third one. And now here we are today. So let's pop up back. Gold. Trend line. So if somebody would have said this was the candle that confirmed the whole breakout, closing above 1350, closing above 1400. Let's put in my vertical line right here. And you say, okay, I'm not going to wait for silver to break out. Same as those previous 3 occasions. Where do I'm going to enter silver right here. I don't care no matter what. And look at that. Where's the previous low? Well, you're really close to that one. So you have 2 choices here. If you don't trust that low right here, let me zoom that in. So you would have entered on the close of that candle right here. The close is 1525. Could have put your sell stop right here below that low. And if that would be the ultimate risk reward. If you weren't sure, take the previous lower low right here, and that would have been your sell stop right here at the low of that candle, just below that, and that's 1386. So that's where we are today, guys. That's what I'm going to focus on today. Let me remove gold. Don't care about gold. Right now it's silver, so we just use gold as a launching pad. And these crazy guys, I would have entered right here. Sell stop. I won't be greedy. Let's put it. I love this little tool from TradingView. So here's my risk, all that zone. I'm entering right here on the monthly candle chart. Breakout confirmed on gold. And oh, why is it stretched like that? Let's bring it back in. Okay, here we go. And what is my target, guys? So that's when the other work you did on the on my other podcast, the gold silver ratio unwinding, where could silver slow down, and I had it at my greedy target was 54. So let's bring that all the way up to 54. Wow, that is my greedy target. So that is my greedy target, guys. So if you're patient, you had an opportunity to get in at this candle right here on June, following gold's lead. Sell stop. If you don't want to get too greedy, down here, previous low, and then you're just getting out of a higher low right there. And where's my risk to reward? 27.86, guys. You see that right here? 27 to 1 risk to reward ratio. That is insane. So if you risk 1% of your NAV, the return, if ever we get to 54 in 3, 4, 5 years or more, that's 27% gain for 1% risk of your NAV. That's an awesome risk to reward ratio. Can we hold it? That's another question. But that gives you great potential right there, based off the lead of the gold chart breaking out. What about today? So let's say today, Pat, you're doing your podcast, all nice, hindsight. So right now, time has moved on a little bit. 12-month moving average has started catching up. And you still believe in the premise that gold is still above its breakout line, it's still doing good. So you say, okay, any moment here, I want to get in. I know it could go a little lower. So you could go down all the way now to this previous low right here. Since we've moved up above, this one is a little lower. Not going to get challenged if this one gets killed. You should not be there anymore. Even if we have a close below 12-month average, you should not be there anymore. So this is your ultra fail safe right here. Low of that candle right here. Enter here. Oh, let's put it back to 54. Can I punch in the numbers? Oh yeah, 54. There you go. So instead of a 27, right here at this level, you get a 10 to 1 risk to reward ratio, guys. 10.73. 1% of your NAV risked for 10% gain of your NAV, total NAV, right there. So that's what silver gives you. Gold's you're leading your entry gate, and then after that you say, look, that's the illusion, that's the gold's just my entry, it's all nice and done, but my goal is to enter silver and play that big move all the way up to that 54 target, guys. Lower risk entry environment, greater reward. Gold's your confirmation that silver will eventually explode and follow through. That's what I'm looking at when I look at silver. That's why, especially for gold to silver ratio that's about to unwind, these areas right here are pretty sweet to enter. There is overhead resistance right here. It has not broken out yet. It could easily fluctuate here a lot more. We know that the time expectations, remember, it's about a year. Once gold has broken out, it takes about a year for you to for silver to break out on its own. But this is for your initial position. If you want to get some exposure to silver, that's how I would probably enter. And after that, you could always add on once you break out above more important monthly defined resistance. And then you could add on as the 12-month average catches up and you have continuation breakouts right here. You get more entries along the way. Initial position, and after that, once you have more confirmation along the way, you could add up, and then you start unwinding once you start hitting resistance and the trend starts slowing down, and then you cross below that 12-month moving average, you have a lot of occasions here to unwind your position. Initial position, other occasions when you close that 12-month moving average, and unwind when you start the 12-month moving average starts slowing down and you close below it. So that's it, guys. Silver has great risk to reward, and I think the train has already started. So it's time to look how to enter or add to your positions. All right, guys. Thanks for watching. Ciao.